Welcome to this presentation on the silver price movement. Here we'll evaluate the benefits of investing in silver and the expected directional movement in silver price. I am Aninda Datta, the presenter. Jai Guruji, Shukrana Guruji. Here we'll evaluate the broad reasons for silver's ream price run in 2025 and the reasons for higher volatility of silver compared to gold. The structural split in silver demand between industry and the store of value and the factors driving higher industrial demand. The world silver production trends and the deficits in silver production while mining gradual rise in recycling. The historical trend in gold to silver price ratio, factors driving the correlation and the divergence. Converging factors making a strong argument for the bullish outlook for silver. The key risks to bull case silver price scenario. The scenario for silver investing in India. Now, silver has been one of the best performing assets in 2025 in terms of percentage price appreciation. Now, this graph shows the silver price movement during the year 2025. The price started out from somewhere around $30 and moved all the way up to $83. During mid-December only it reached 64. The relentless move shattered a decade-long ceiling above $30 and broke the previous 1980 all-time high. This was not a temporary spike, but a structural repricing that left almost most institutional forecasts behind. Silver has both monetary demand and industrial use, so its demand is difficult to predict accurately. Now, silver's annual price volatility is generally in the range of 25 to 30%, whereas gold's price volatility is in the range of 8 to 10%. The higher price volatility is caused by several factors, like the total market value of silver is far lower than gold. Smaller market equal to less liquidity depth equal to large price swings. Silver supply is less responsive in the short term. Gold has a monetary anchor, that is, it is held by central banks as reserve. Silver doesn't. Moreover, gold attracts safe haven funds flows during crisis time. Silver futures markets have a higher proportion of leveraged speculative positions compared to gold. Now, what caused this sharp price appreciation of silver? Silver demand is structurally split between the industrial use and investment store of value, with the industrial demand at more than 50% of the total use. The industrial demand at around 55 to 60% of the total demand and is steadily increasing. Now this graph shows, picture shows the use of silver in the various industries. Now the industrial applications now account for over half of total annual silver consumption, making demand increasing sticky and price sensitive. This was reinforced by the US government adding silver to its official list of critical minerals in 2025. Now, silver has a major use in solar industry, electrical vehicles, AI and data centers, 5G and electronics, all new age industries which are growing at a very rapid rate. Silver is a store of value and investment demand. This component is around 25 to 30% and 35% and includes physical investment in coins and bars, ETFs and similar vehicles, private holdings. The investment demand fluctuates a lot and variations are driven by inflation expectations, real interest rates, currency debasement expectations. Jewelry and silverware. This category comprises 10 to 15% and is driven by consumption and value storage. The industrial demand is expected to rise as the consuming industries are expected to witness secular growth. Now, the steadily rising industrial demand for silver is bound to put upward pressure on the silver price unless supply also responds. Now, this picture shows the rise of the industrial demand of silver. Global industrial demand by sector. See, the share of electricals and electronics industries in the total demand has been rising since 2000, I think 19 or 20. Electricals and electronics demands grew by a staggering 20% in 2023 alone. Global industrial demand surged 11% in 23 to a record 654 million ounce. This growth has been fueled by structural gains from the green economy applications, which more than offset the macroeconomic headwinds in the consumer electronics. Now, as industrial demand rises, pushing up the price, the investment demand too could rise. The high silver prices increase substitution efforts in electronics and renewables, but the full replacements remain limited by silver's unmatched conductivity and low resistance. Copper, aluminium, and graphene emerge as the primary alternatives, though mostly they require added complexity like burial layers. Now, world silver production, its characteristic is inelastic mine production. Global mine production of silver. The graph shows the global mine production of silver, which has been hovering around the same level since 2019. However, it witnessed a slight jump in 2023. This shows the 2023 and 2024 estimated total supply of silver, with the total demand witnessing a slight increase and the deficit of around 200 million ounce. Around 70 to 80% of mined silver is produced as a byproduct of the mining of other metals. This means production cannot be easily scaled up when the prices rise, as production decisions are tied to other base metals. The big shortfall in the mined silver compared to demand is triggering a rise in the recycled silver production, meeting part of the deficit. The deficit is also met by the above ground inventory, which has been continuously falling for the last 4 years. The physical inventory with the New York COMEX and Shanghai Exchange has plummeted from the peak levels by 60 to 70%. Now, there is a persistent supply deficit in silver as demand outstrips supply. This graph shows the silver market balance in million ounces from 2019 to 2024. See, there is a persistent supply deficit. 3 of the largest physical deficits ever recorded are occurring back to back. Even in 2025, there is a supply deficit. Around 70 to 75% of silver is mined as a byproduct of mining other metals like zinc, copper, lead. Thus, supply rigidity increases price volatilities during the demand increase. Moreover, there is a continuous erosion of global inventories as demand outstrips supply. The cumulative deficit for the period 2021 to 25 is estimated to be around 800 million ounce. During 2021 to 24, the London Vault and exchange stocks fell by around 500 million ounce. The further fall in the above ground silver inventories could be a major driver of the silver price. Now, gold-silver ratio shows how many ounces of silver are required to buy 1 ounce of gold, calculated by dividing gold's price by the silver price. The gold-silver correlation is driven by shared monetary drivers and silver-specific industrial dynamics. This ratio shows how this graph shows how the ratio has moved around from 1975 till date, till 2025. It reached a peak of 120 around 2018, and the last close is at around 60. The correlation between gold and silver price is sustained because the monetary factors have the same effect on both the prices. USD movement. As both metals are priced in USD, so fall in USD increases their price and the rise in USD reduces their price. Change in real interest rates. As both are non-yielding assets, so rise in real interest rates causes fall in their prices, whereas fall in real interest rates cause rise in their prices. Rise in inflation expectations and the monetary debasement. The prices of both metals rise as they act as asset hedges. Financial crisis, sovereign debt crisis, geopolitical shocks. Usually gold rises first. Silver follows with higher volatility. Silver has more supply side rigidity as majority of it is mined as a byproduct. So silver price volatility increases whenever there is a demand fluctuations and the rise in gold price. The ratio has a long-term mean of around 50. As fluctuations in the industrial demand of silver make this ratio diverge from the mean of 50, so permanent increase in industrial demand as proportion of total demand may change the long-term mean of the ratio. Gold and silver price correlation breaks down in the short and medium term, as 50 to 60% of total silver demand is industrial consumption, and that varies independent of gold demand. Industrial demand drives silver price. During economic and industrial boom, the silver outperforms gold by a good margin. This chart shows the cyclical phases of the silver price of the gold-silver correlation. Phase 1, the logarithmic phase, initial bull market phase, silver lags in response to gold's fluctuation. The linear phase, the mid-market phase, a more direct one-to-one relationship emerges. Exponential phase, final catch-up stage. Silver's price increases exponentially relative to gold, then outperforming dramatically. Key takeaway, understanding which phase the market is in crucial. During industrial slowdown, silver underperforms gold. Volatility and liquidity difference between gold and silver. Silver is much smaller and thinner than gold. Speculative flows exaggerate price moves. This causes temporary decoupling. Gold-silver correlation is maintained by shared monetary and macro drivers, while industrial demand and volatility determine how closely silver tracks gold at any time. Now, three converging forces are driving new silver paradigm and make a strong argument in favor of bull run in silver. The continuous growth of new age industries like electrical vehicles, data centers, solar photovoltaics are expected to be the primary source of growth in silver demand. The global supply squeeze. There is a gestation period in exploring new mines. Around 70 to 80% of the mined silver production is concentrated in three countries: Mexico, China, Peru. So if these countries impose some export restrictions, then silver supply would suffer. China have large silver consuming industries, so may prioritize mined silver to domestic industries. Tailwind of monetary demand. Increase in silver price is bound to increase the monetary demand. Like a financial crisis may increase demand for silver also as a hard asset along with that of gold. When USD is expected to devalue, the silver price generally increases as silver is priced in USD. Increased silver price may increase the demand for silver jewelry. Now, even though there is a structural case for strong silver price, there are some key risks. Industrial slowdown. A stronger than expected global slowdown, particularly in China, could temper industrial demand for electronics, solar power, EV, etc. Demand destruction. Higher price for longer could incentivize industries to accelerate R&D into substitution. Although silver's unique properties make this difficult and costly. Exploration efforts for new silver mines may be undertaken with renewed vigor, thus increasing production of mined silver. Market volatility and positioning. Silver is highly volatile. Its small market size makes it vulnerable to sharp drawdowns from profit taking. The fall in monetary demand may compensate for rise in industrial demand, thus negating the bullish price argument. High speculative position. This makes price susceptible to sharp fluctuations on regulation changes, like increase in margin of silver futures by CME in December 2025 caused a 7 to 8% drop in price. In the commodity exchanges, the trade happens like fractional banking. That is, the quantity of paper trade is many multiples of the underlying physical quantity. Therefore, the exchange traded price could be significantly different from price of physical silver driven by leverage trade. Any increase in margin requirement by exchanges may result in deleveraging of the future contracts. The events of 2024 were not a cyclical peak, but a fundamental revaluation of the silver's dual identity. This picture shows the price prediction for silver for 2026 by the various institutions, ING, JP Morgan, Saxo Bank, etc. The key insight: the most analysts see the $50 level as the new floor, with significant upside potential if supply constraints intensify or monetary easing accelerates. The market is now pricing in its non-substitutable role as a critical industrial commodity for the economy and its renewed purpose as money asset in the era of currency debasement. The convergence of inelastic supply, explosive structural demand, and a favorable monetary environment has created a strong bullish outlook. The price support of $50 per ounce predicted as a floor price is based on technical analysis and silver's historical price volatility. However, the silver price is unlikely to fall to $50 in near future, even if there is a price correction. The question for 2026 and beyond is not if this new valuation will hold, but how much further this repricing could go. Now, the Indian scenario. There is a strong argument in favor of silver investing in India, as just like gold, it is a hedge against inflation and consequent currency devaluation. Why silver is a good investment avenue in India? The published inflation figures in India appear to be understated. So consequently, the nominal interest rates offered on so many debt products actually offer negative real interest rates based on real inflation. So investment in hard assets is always recommended in India for better returns, and silver is one such hard asset. Moreover, as silver is priced in India as a function of landed cost of silver based on international price plus import tariff, so any devaluation of INR increases the domestic silver price, even if international price is constant. Silver investments in India could be made through ETFs, bars, or jewelry. However, market price of ETF is generally different from the market price of a quantity of silver represented by 1 unit of ETF. So, investors should prefer to buy silver ETF when ETF prices are preferably at a discount or at par to the market price of silver represented by an ETF unit. Now, silver has high inelastic supply and medium level inelasticity and demand. So, low storage cost as a percentage of price. So, convenience yield sometimes becomes higher than storage costs, thus leading to backwardation in the future price. In such infrequent scenarios, buying silver in futures market could lead to a positive carry trade as futures price generally increases and converges towards higher spot price. So this concludes this presentation on silver price outlook. Thanks for watching. Jai Guruji, Shukrana Guruji.